What is up everybody, Gifford here, and today we're going to talk about the power of dividend investing. So getting straight into it, the agenda will be passive income from dividends, also how does it snowball into a big weekly amount. So I'll do my best to keep it simple and explain like I'm 5. Using a real stock, I hold NPW, and from the thumbnail, how I can grow it from 23 cents all the way to $100 a week New Zealand. So talking about how it starts, we're going to use NPW stock, and I'm going to talk about the DRIP strategy, which is dividend reinvestment plan. As you can see there, I've got 1400 shares in it, and on the right hand side, if I get 15 cents per share, this equals to $210 every 13 weeks or quarterly payments in a year. Therefore, using the DRIP at $210 and we pay for the stock at $5 a share, the stock price does move up and down. Basically, we'll get 42 shares every time. So showing you the magic of compounding, we can break these payments down to weeks. 42 shares, again at 15 cents, is $6.30 every quarter, which means 48 cents per week. So showing you the magic of compounding, what we're going to do is we're going to break down the payments in weeks so it's easier to understand. So from the 42 shares that I get, they will pay out 15 cents. So this equates to $6.30 every quarter, which means it's 48 cents per week. And then we add that to the 1400 shares I already have, also paying out 15 cents. This gives me $210 every quarter that I stated before, and this equates to $16.15 per week. We add that in total, therefore I now get $16.63 per week for the first quarter. So to show you how dividends really start stacking up, what we're going to do in this scenario is that I'm also going to buy $100 of this stock. And to keep it simple, let's keep the price of the stock at $5. So this means every week 20 shares I'm going to get, and that also pays 15 cents. It's only going to be $3 every quarter, which means it's 23 cents per week. Now while this seems little, if you add this into my existing shares as well as accumulating every week, this will actually start stacking up quite a bit. So for 1 year, you can see that 52 weeks times 20 shares, it means that every year I'm going to get about 1,040 shares. So looking at the snowball effect of this scenario, basically the first year I'll do my 1400 shares, and annually I'll get $840. So this translates to $16 weekly from the income. So after the first year, we have the initial 1400 shares. We then add the 42 shares that I get along from the dividend payments, and then we add the 1040 shares. So in the first year, if you add these shares all together for the scenario, we can have 2608 shares, and this will be paying 60 cents, which means this gives us $1565 annual income. If you're wondering where the 60 cents comes in, basically I've just multiplied the 15 cents times the 4 quarters, so it gives us an annual 60 cents instead of 15 cents per quarter. So if we translate the 1565 income divided by 52 weeks, this shows us after the first year, we basically get $30.10 per week. So if we continue this on for year 2, we then get the 2608 shares that we had. We then are able to buy more shares, 78 more shares, and then we add the 1000 shares that we normally get. This is going to equate to 3,960 shares, and we multiply that by 60 cents, which is the annual dividend. You now get $2,376 per year of annual income. So if we translate $2,376 into weekly payments, this gives us $45.69. We carry this on for the third year again, and we can see that we've got 3,960. So I think you get the general pattern here. We add another 118 shares, and we add our 1,000 shares. We then end up with 5,472 shares at 60 cents. This gives us $3,000 annual income. We break this down into weekly, and you can see we now get $63.13 per week. Obviously, the stock price will remain $5 over 4 years, so it's unlikely the stock price will go up, but we'll just keep it at $5 just to show you this example here, and you can really see it snowballing from the $16 all the way to $63 a week if you follow this kind of plan. So you can see the benefits there, but first of all, let's talk about why I wouldn't actually do this, because it's too concentrated on NPW stock. Now, I like to diversify, so money into one stock is very risky, which also includes having like a large cap like Nvidia or any other company. They can all go broke, right? So you shouldn't have a large portion of your money into one company. Even with Tesla, I try to cap it like a maximum 20-25%, even though I believe in them long term. Also, NPW has a very high dividend yield of 12%, which means this is a high risk company. And if we look over here to Stock Unlock, you can actually see that they've got a rating here, an insight rating for NPW. It's only 2 out of 5, which shows you the health of the company, and they show the good points and the very bad points. But basically, one thing is that the stock price has actually decreased quite a bit because there is issues with the company itself. So going down to this point here, why am I actually showing you this? And that is because it's to show you the power of dividend investing and also the DRIP strategy where you're putting more money in. And again, after only 3 years, you're basically earning 100 New Zealand dollars every week. So that's 63 US dollars converted into 100 New Zealand dollars. That's $5,000 every year that you're now generating if all things were the same. And this is a lot of KFC every week. So in summary, the dividend and DRIP strategy can be really powerful over the long term if you stick to it. This generates consistent income if the underlying company can do well, paying out their dividends over the decade. So I hope this example was useful, and you can see that I actually have a decent amount in MPW to kind of show you how this can build up. I always do options in it as well, but this one is just basically just using the dividends to buy some more and also using my own capital to buy some more and show you that it does snowball, and it is a verified method to do it. If you have any questions on this, just pop it down in the comments and I'll do my best to answer them. And watch this video somewhere here that will pop up if you want to see my entire stock market portfolios. And feel free to use any of my referral codes. If you want to hear more from me, I'm also on Instagram where I post about stock market news and any events that is relevant, and also post what I do in the stock market. So I'm over there on Instagram if you want to follow me. The trading platform I use is Interactive Brokers, Hatch Invest, Stake and Sharesies for individual companies, and I use Investnow for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. Hit like and subscribe if you want to see more videos from me. I'll do my best to get some more out. I am working sometimes in my second job to generate that capital for my investing, so I won't be able to put as many videos out, but I do my best, especially this late night video that I'm doing now. Otherwise, thank you for watching, and I'll see you in the next one. Goodbye.